quite basic, what you need to know that will then help you put yourself in the right frame of mind, and with some maybe little bits of homework in order that you're then prepped for the next few that we're going to be doing for you. So it's all about educating you through awareness and understanding what financial awareness is and how we can ride that type of thing out. So as Kevin rightly pointed out, I'm Julia, and this is our little family tree. So today I'm here with my eulogy hat on. All of us within the business have our own specialist subject. It's very much like Mastermind. So I normally sit on the right hand side of the family tree under TWP Legal Services. So that's all about estate planning and stuff, and that's another one of those presentations we'll be doing a bit later on for you. But Eulogy's been doing this for about 18 years with the NHS now, so it's all about information and education. Please do not think that today is about advice for you. Kevin's rightly pointed out there's 6 webinars that we're going to be doing. This is just a selection of some of them. There's 7 on here. We're going to be doing 6 for you. And as you can see, the one popping out, the little pizza slice, is what we're going to be talking about today. And pensions and retirement is happening next week, which is always, as I say, the most popular one. Just for housekeeping, I'm sure it's all done. Can you just make sure that your mics are off and that your cameras are off as well? That just helps if there's lots of us on here with the broadband width. So I've already mentioned that today is about information. So just to recover that caveat, everything that we pop on here, we try to ensure is as accurate as possible for you. So please don't shoot the messenger. But if you do spot something that is wrong or we've missed something out, then please email us and let us know, because we'd obviously want to make sure that we've got it right going forwards in those instances. It's very important if you are a special class or a mental health officer status and you're in the 95 scheme, that you do check out your decisions before you make any choices about retiring or continuing to work. We're going to be talking about the DWP and your state pension, and also like where to go for advice. Now, going through this today, I will be using stereotypical examples. Like I said, we try to keep this vanilla, and these examples are just to illustrate points for you. I'm not trying to exclude or not or include certain genders or races or whatever. I am literally just trying to get that point across there to you in a really, really short space of time. So without further ado, let's have a little look at this, okay, and think about education and well-being. Now, I know that finances and the word finance and the word pension and the word investment can strike fear in people. When I'm coaching them, they don't understand money. Money looks like hieroglyphics. There is actually, I did actually hear it on the news today or the radio or something, that there is actually a condition for people who don't understand finances. So please don't think you're alone, okay? We don't get taught about these things at school. Well, at least we didn't in my generation. And I know we're working really hard now to try and get that in so that your kids can understand the importance of money and investing and pensions, etc. So today is about giving you that education, that information, tools to put in your toolkit, where to go so you can grasp your finances tightly and then have control, because this is going to be your future. What does your retirement lifestyle look like? But what we have to remember is that this comes down to well-being and thinking about money, and maybe you've got more debt than you wanted to have, and that's because of the COVID situation, or maybe partner or spouse being furloughed. So we don't feel secure and we don't feel in control, but also we might have had bad experiences in the past, and good old human beings like we are don't really like change. And therefore what we need to do is, in order to make sure that these two things gel together, that you have that secure feeling about finances, that you know that you can pay the bills today and deal with those unexpected, and you're on track for that healthy future, is all about changing our behaviours and our habits. Are you one of those people, or if you've had a really bad day, the first thing you do is see an ad on your phone, or you pop onto your favourite internet shopping channel, you pop a couple of things in your basket, you spend the last 50 quid on your credit card, and off you go, and then you go to bed and you wake up in the morning and you go, crikey, why did I do that? It's because that's habit and behavior, and we think it makes ourselves feel better. But does it? How does it make you feel? I want you to feel confident and empowered about having control of your finances. But I don't want you to do this. I'm really sorry to say, but through years of doing this, there's a thing within the NHS called herd mentality, whether we're looking at the little fluffy woolly things or the what goes in your ears. Good old Roger in radiography comes up to you and says, Julia, he tells me, I'm retiring in 6 months' time. I've just sorted it all out. I'm taking the largest lump sum. I'm going to pay off my mortgage. I'm going to pay off my car. I'm going to build a conservatory and I'm going to go on holiday. You should do the same. We've worked here the same amount of times. Let's take that retirement and do it. Stop. Pause. Fabulous, Roger, is what I want to say. I'm glad that you've got all that lot sussed. But you know what? Everyone I'm talking to now and is listening to me is unique and individual. Does Roger know about you personally? Does he know about what income comes into your household? Does he know what bills go out? In fact, do you, as a question? It's all about taking control. We'll cover that off in a minute. Does he know about your health, your partner's health, your spouse's health? All of these kind of things. No, he doesn't. So just because taking the large lump sum and having lots of noughts in your bank account sounds amazing, is that right for you? It's all about control and making the decision correctly for yourself. I don't want you to be Titanic. I know it's a bit of a cliche, but what you see above the water is just what you want people to see. They don't know what's below the water. That's what destroyed the Titanic, wasn't it? The bit of the iceberg below. So you've got to understand, what is your relationship with money? What is your financial position? Do you have a balanced lifestyle? What financial prep am I going to give you? What is behavioural finance and financial vulnerability? Got to think about how we manage debt, how we can develop what we call financial resilience, and how money and mental health go hand in hand, okay? Going to talk a lot about what we call the cornerstone of financial planning. That will pop up as a theme the whole way through these. Always, I want you to be fraud aware. We're going to bust a few myths. I've just done that one, herd mentality. And we're going to talk about basic economics, and hopefully all of this will allow you to take control. So let's firstly start, by understanding our position and our relationship with money, because money is a really simple thing, isn't it? Well, the concept of money is, because if you think about it, if I gave you £1, you can do 3 things with that pound. You can spend the whole of it, you can save the whole of it, or you can spend some of it and save some of it. Okay. That's really what money is. But how has it all become complicated? Well, it becomes complicated as with us as human beings because of this thing called our past. But what we've got to think about is what's happened has happened. Okay. We have maybe gone through university and come out with some debt. Maybe we travelled a lot and spent every penny that we earned, and therefore we didn't get any savings. Maybe we like to go out and party. Maybe you went through a divorce. The kids suck our money. Homes always cost money, mortgages, renting. Maybe your partner or you made a bad business decision and there was a bankruptcy involved. Okay, that's all happened. What we now have to think about now is, where are we right here, right now? What's happening today? What's happening tomorrow? How can I make sure that I put the right tools in place and know where to go to be able to make some wonderful decisions that then gives me enough for my future and my long-term future? Remember, you're aiming at this retirement planning. What does your retirement lifestyle look like? And think about the estate side of things. Have you got your powers of attorney in place, your wills? You know, you've got a legacy. What does your future look like? So right here, right now, think about the present. Do we have a mortgage still? Is that something we'd like to focus on clearing? Do we have a credit card debt that we'd like to get rid of? I can't see your faces. Am I looking at people who are saving for a home? Do you want to educate yourself further? Have you still got the kids at home? These are all things we just need to think about where we are now. So when we do that kind of thing, then we need to look at ourselves, hold that mirror up, and what is your relationship with money like? Because all of us have good and bad relationships, don't we? Some bumpy experiences along the way, whether they're with family, friends, personal, all our relationships have an impact on how we then react the next time we're in that situation. And money isn't any different, everybody. If you've had a bad experience, might have invested something and something went bust, you might think, oh no, I'd rather keep my money under the mattress or in the bank, where actually we know inflation's at 9% or something this morning. So actually that's not doing us any good. And as I've already said, our physical and our emotional desires can get in the way. Had a bad day, what do you do? The physical thing, I mean by maybe you go and get a takeaway, spending money you haven't got. That doesn't make you feel any better, but the food and the stuff going in right at that time, or maybe having a glass of wine or a pint does. If I'm talking like this to you and you're sitting there thinking, crikey, yeah, I do get down about money. I do worry about how I'm going to clear my debt. That's okay. That's wonderful, because that means you're starting to think, if I'm had a bad night's sleep because I'm worrying about money, that's going to have an impact physically on me because I'm tired, but also mentally. And therefore, when I wake up, I might be a bit grouchy with the people in my household. And when I come to work, I might be a bit scratchy and snappy with my work colleagues as well. And that's where you have to kind of go, oh, wow, what have I done? Am I the person that thinks I'm in a black hole and there's no way out? I don't understand my bank statements. When did the last time you look at a bank statement? Do you understand what's going in and out? Did you click on something in COVID that now you're paying £6 or £7 a month for, that you've forgotten that the free thing finished and actually that's not helping you? Are you the person that has a coffee and croissant every morning going to work, and actually if you just stop that for one day, you could save yourself a fiver, and that means you've got 20 quid extra in the bank at the end of the month, and that 20 you could spend on making yourself happy, whether that's popping it towards a savings plan, paying a bit extra off the mortgage, the credit card, or actually going out with your partners and loved ones. All of these things we need to start to think about and embrace, and know that there's people there and light at the end of the tunnel to help us. Because I want you guys to have an amazing retirement, okay? So therefore I want you to focus right here in the middle of that screen, that wealth accumulation, that golden box. This is kind of the stage, as I said, can't see your faces, that I'm hoping that you are heading towards. So maybe you're in a lucky position that actually the kids have gone, they've flown the nest, they're standing on their own 2 feet. Maybe you've got a year or two left to pay off the mortgage. Maybe you're 5 years from retirement. I don't know. Maybe there's just a little tweaks and stuff that you can start to do. I know that energy prices and stuff are going out, but it's just a case of looking at how we are to see if we can make teeny tiny changes. It's all about keeping it small, keeping it regular, keeping it simple. So let's have a look at, we just put these together, by the way. These aren't technical terms for anything. You might be able to look at this and think, where do I sit in this list? And it's a great starting point, because I'm talking about keeping things simple and setting things that you can achieve. Now, we deal with people that have gone from maybe a planning or a thriving stage down the bottom there. That's where they were 2.5, 3 years ago. Now they're at a surviving stage because they lost an income through COVID. They now had to dip into those savings to enable the household and the bills to be paid. So this is never a set thing. Things come and go in your life, and it's all just about, as we said before, confident and empowered, feeling secure. Are you in a battling stage where, like a lot of us, what you've got coming in is going out, and most of the time you live your life in your overdraft and you haven't managed to save anything? There's nothing wrong with that. You're still living and you're still surviving. Don't beat yourself up about it, okay? But there are people out there that you can talk to, that can educate you, that can give you information and help you start maybe to move to that surviving stage. So instead of spending every month of the year in an overdraft, you get to spend 9 months of the year in an overdraft, that kind of thing. So I've said it already, it's about taking control. And I mentioned the word debt, and debt seriously is not a bad thing, right? We can't buy a house without getting in debt. Most of us like to go on holiday and we'll put it on a credit card. Well, credit card is a form of debt. Your overdraft is debt. And that's okay, provided you are in control and therefore it is affordable and manageable. I hate it when I see people having to go for payday loans and things like this. And these are just some stats that we've put up here for you. You know, we're in trillions and trillions of pounds worth of debt of households all across the UK, and that's just going to increase to 2.3 trillion in the next couple of years. And the Citizens Advice in England and Wales deal with 1,800 debt issues every day of the year, and this was the stats that were available pre-COVID. Now, Christian Aid Poverty, this is just another organisation that's out there that you can talk to. And they just said, and this is where the financial well-being and comes into play, is that 75% of those seeking debt help said that it made them ill. And that's not surprising, is it? That worry all the time and fear. And over 3/4 of those in relationships said that it impacted their relationship. That's what we're saying, that the financial and mental go hand in hand. And sadly, 1/3 of people that this CAP spoke to had considered attempted suicide. And as I've said, debt isn't a bad thing. There's lots of things that we can't do. Maybe you can't get to and from work unless you've got a car, which means a car loan. But, you know, there's all these kind of things, and there's all these amazing organisations out there that are happy to talk to you. You'll see that hand coming into what you think's your black hole. Grab it and take the help. Because we see that there's two types of debt. We've got debt management and debt managing you. How do you want to be? Yeah, this is again control. I don't want the debt managing you. I want you to be able to manage the debt. Okay. Now, I was talking about keeping it simple, keeping it small, keeping it regular. This is a marathon, ladies and gentlemen. This is not a sprint. It will take time for you to get somewhere. It's all about baby steps. Don't set yourself up for a fall, because life will get in the way. So you will hit a wall. You will have a setback. The washing machine breaks down, the car fails its MOT. So and I don't want you to think of that negatively. You need to think, phew, actually, we had a few pounds in the bank that was enabled us to do that, and deal with that without getting yourself back in that distressed mental state again. What you need to think about, though, is spending more than you earn. Is there a way we can kind of reduce that? Do we have to live in those overdraft facilities? Please don't increase borrowing if you can help it, because the anxiety and the frustration and the worry that comes with these doing these things and these emotions can lead to massive anxiety and depression. And that's where CAP get those stats and things from. But managing the debt can become more costly if you end up having to do those payday loans, like I said. So be able to take control. We don't want the financial anxiety creeping in. We want your well-being to be good. We don't want to have that knock-on effect at work, everybody, and your home, okay? We want you to start with those baby steps. So let's start a little to-do list, shall we? I want you to make sure that you look at your bank and building society accounts and know your statements. I don't want you to be the person that hears a thud when the letters come through that letterbox and you pick it up and you know exactly what's in the envelope and you don't want to open it because you've got a direct debit set out that will take the minimum off that credit card or loan or whatever every month. As I said, have you clicked on something while COVID was on that actually now you're paying a bit more? When was the last time you renewed your insurances? All of them: mobile phone, family, pet, life, car, buildings and contents, all of those kind of things. Make sure you know what goes in and out. Actually, another question: when was the last time you opened your payslip? Do you know what your gross salary is? Do you know what your net salary is? Do you know how much of your earnings goes to national insurance into that wonderful pension that you've got with the NHS? How much tax you pay? These are starting points, and your banks and building societies have amazing people at the end of the phone that will talk you through what everything means in your statements if you need that assistance, okay? I love this slide. This is us. This is humans. we go through these. Sometimes we can do all of this in a day because things are fleeting. Other times we start up the top there with that anxiety about, oh my gosh, how am I going to get through the month? Well, actually, if I don't think about it and bury my head in the sand, it's fine. We'll bumble through, won't we? I don't need to think about it. And then the emotion starts to go because you're not sleeping and you're getting grumpy and you're getting more stressed. Then you become fearful about, is there ever going to be an end to anything? Yeah, there is. There, like I said, baby steps. Got to start somewhere, everybody. That hand coming in to reach you, grab it. Once you realise that, you'll feel so much better, so more energised, and you'll be able to slide through and move out the other way. Now, I want to bring this in because my second thing I want you all to do is understand your income and expenditure, your budget planner, if you like. And this is all about the cornerstone of financial planning. We've got these core expenditures, the things that have to go out every month. We've got to pay the mortgage, we've got to pay those unsecured debts, we've got to eat, we've got to keep warm and have water, and we've got to get to and from work somehow. So when we look at what we've got to pay all of those, that's our working income. And in retirement, pensions and investment income, or maybe you're actually got some of that coming in now. Wonderful. The problem is we're always tilting the wrong way. Why is that? Because of our lifestyle and because of family life, and normally because we can get access to debts. And the lifestyle, the stuff that tips us the wrong way, is that discretionary spend. It might be the gym membership, it might be those you know, I don't know, other things are available out there, Netflix, Sky, BritBox, you name it, all those kind of things. Keeping on having the latest technology. Maybe it's the costly kids clubs, going on holiday, meals out, theatre, cinema. All of those extra fluffy foo-foo things are what make it tip the other way. But remember, guys, when you retire, that is your retirement lifestyle. That discretionary spend is going to be what your lifestyle looks like. So I would like you to do an income and expenditure sheet. Very simple. You can do it on a spreadsheet, get a piece of A4 paper, you can just write it down. What income do you have coming into the household? Excuse me. What have you got going out? And what do you spend stuff on? Now, I want you to be honest with this and also round it up. If something's 32 quid, excuse me one moment. Round it up to 35. Things aren't going down. If you want to be extra generous, make it 40. It doesn't really matter. But list it all down and then think, actually, I want to retire in a couple of years' time. So I'm looked at my total reward statement. It says my pension income's going to be this. And then maybe you're retiring and getting your state pension at the same time, or maybe that comes in a couple of years' time. What's your outgoings going to look like then? And what's your discretionary outgoings going to look like, that retirement lifestyle? When you've done those, it's an amazing exercise to do. It just focuses the mind. Where are you spending your money? Are you spending too much on clothing? Are you spending too much on health insurance? And actually we can get the same amount for cheaper elsewhere. What's it going to look like when I retire? Can I afford to retire therefore? That's a big question, and that will be handled as we go through these suite of 6 webinars. So I've been talking about keeping it simple, keeping it small, keeping it regular. This is all about setting realistic goals, okay? I don't want stretchy goals. What do I mean by stretchy? Oh, I'm going to save £50 a month, Julia. Actually, I can't quite reach that. I can only afford to save 20. Don't make it too much of a stretch. Make it realistic. Build that plan. Do that budget planner. These are just examples. And as I say, I don't know each and every one of you. Do you want to be debt-free? Now that could be a mortgage or a credit card in 3 years or 5 years. Do you want to be mortgage-free in 10? Would you like to be, excuse me, the person saving for a house deposit? All these kind of things. Or are you just the one that wants to have that emergency fund there, ready in case something happens? Okay, it's that being prepared. It's making sure that you feel confident and secure the whole time. So sorry. Right, let's have a look at some government benefits, because these things are there to help you, and nobody takes advantage. Well, some people do, but a lot of people, there's so many benefits out there that aren't taken up. So this is an example. Let's just say, sadly, you or your partner ends up being made redundant. Okay, so you might get a lump sum that comes with that. You want to be able to try and keep some of that back. Sign up for job seekers allowance, £77 a month. Sorry, £77 a week, paid every 2 weeks. That's quite a lot of money. That could just be the saving grace. But also the important thing with this is it keeps your national insurance contributions going, because your state pension is based on your national insurance contributions, okay? So you can start to look, or your partner or spouse can start to look for work. They're being paid to look for work. They get that for 6 months. You might not have to dip into that lump sum, but you might be able to use that money to go towards your managing your core spend and maybe having a nice time out. All about budgeting. All of this information is on the .gov website. Also, this is very sad, but we want to put it in there because this is not claimed very much at all. And if you're under state pension age, then actually there can be a bereavement support payment that comes into the household. And also if you have children, it's a lump sum. So anything for anyone that's passed away from the 6th of April. Okay, again, it's on the Age UK website and the .gov website. As I said, there are billions and billions of benefits out there that are unclaimed every year. People I talk to don't think they're entitled to anything because they have a child and they are working, for example. Actually, if you're a single parent and you're working, there might be a benefit that is available to you. And that actually did happen to one of our clients. We told her to go away, look things up, and lo and behold, she was entitled to a little bit of extra money a month. Now, it wasn't a lot, but it was enough to make a difference for her. So these things are there for you. Don't struggle. Like I said, there's so much help out there for you. I'm coming back to that mental health and financial well-being again, because it is a cycle, okay? Mind, again, fabulous organisation to talk to and get some top tips from. We know that poor mental health means that you find managing money harder because you don't want to look at what's that in that envelope. You don't want to look at your bank statement. You just think, how am I going to get from A to B one month to the next month? And we know, therefore, as I've said, worrying about money makes mental health worse. Yeah, that means you don't sleep, or you could go back into those old habits, those ones I want you to kick, that behavioural habit of spending because it makes you feel better. But it doesn't, because all it does is put you in this perpetual cycle. So let's have a look at our pensions and think about the retirement that you would like. What's this retirement planning? What do you need to do? So let's understand what a pension is first, because in short, it's a long-term tax efficient savings plan that will give you an income when you cease receiving your employment income. Okay, and now in that golden box age, that wealth accumulation stage, this is where you need to start considering things and making sure you've got everything in place. There's 3 types of pension. Your state pension, now that's based on national insurance contributions. We've got money purchase plan. That is, some of you may have had this if you had a life prior even previously to the NHS, but this might be what your partners and spouses have as well, where contributions are paid into a fund that's invested, and when you retire they give you your fund and off you toddle to buy your pension that then has to last as long as you do. Then there's what we call a defined benefits pension. This is what your NHS scheme is, gold standard, and it will provide you an income till you die, not till you run out of money from that pot. It's based on the number of years service you've got, or a thing called pensionable pay, and a little thing called the accrual rate, which is the magic number that pensions at Fleetwood work out your pension income for you. So let's just briefly go through what the pensions are. This is your state pension, everybody. This is £185 a week for the full state pension, so just over £9,500 a year. So that's for anyone that is retiring now. Okay, it's called the single tier state pension because prior to 2016, the state pension came in 2 parts. One part was called SERPs, and you could do what we call contracted out of SERPs, and that allowed your employer, the NHS, to take a little teeny part of your state pension and plop it into your NHS pension. So the 3rd bullet point down, COPE, is your contracted out pension equivalent, could be deducted from your state pension. What do I mean by that? Well, let's say you retire at age 65, you receive your £185.15 a week, but you're also, sorry, you retire at age 65, you receive your NHS pension. You can't get your hands on this for 2 years, but because you've already receiving a small part of the old the old state pension for 2 years, it might be that when you come to receive your full state pension, that you only get £185 a week. You don't get the extra 15p because you've already been paid it in advance for 2 years, and that's really unfair on the rest of us who haven't had that opportunity. Now, I said about this being based on national insurance contributions, so I want you, I think this is number 3 to do, to go to the .gov website and do the check your state pension. You want to make sure that you are on target to have paid 35 years at least. You could work for 40 until you reach state pension age. You're always going to pay NI contributions. So you could have maxed out. That's just the way of the world, everybody. But you want to make sure that you're receiving this. This is your income in retirement on top of your pensions, okay? Now, it might be that you've got some gaps because you were on jury service, you were raising children, so NI credits might be available to you. This is what you need to check. It also might be that actually you came to work later in life and therefore class 3 national insurance contributions are available to you. So where you can pay extra in right here, right now, while you're working to make sure that you get those 35 years, okay? Now, when you're planning that budget planner, that income and expenditure, the great thing about understanding your state pension is that it's a thing called triple locked. So every year, it's index linked to the highest of the consumer price index, the average earning index, or 2.5%. So technically, if CPI and the average earnings index are lower than 2.5%, you know that every year your state pension is going to go up by 2.5%. So you can factor that into your budget planning going forwards. Now let's have a quick look at the NHS pensions. We've got the 95, the 08, the 2015 and Nest. So the next to do is your total reward statement. Go to the website and download your TRS statement. Make sure that it's correct. Make sure that it shows that when you started work, that you've been paying into it. It will show you what schemes you're in. But more importantly, if you happen to be special class or mental health status, a mental health officer, and have those statuses, that shows on there because you have the option to be able to go at age 55. If you can't get on the TRS statement, you can go via your government gateway ID or your NHS ESR site. Okay, so do this, have a look at it, get to know it. If you're planning to retire within the next 12 months, then go to NHS Pensions at Fleetwood and get a forecast, okay, or even your local pensions department, so that you can then properly work out what your income's going to be in retirement. Now, we get asked loads of questions. When can I retire? How much do I need to retire on? I'm in more than one NHS scheme. How's that going to affect me? What are the pros and cons of retire and term? What on earth is winding down? Large lump sum, small lump sum. I've got some other pensions, so is my partner and spouse. How does this all work? These are the big questions, and these are what we're going to be tackling in the next webinar next week. I also just want to touch on the McLeod judgment. That again is another webinar in itself. Off the top of my head, I can't tell you if that one's being done, but this will affect you guys. Everybody now is in the 2015 scheme. I will talk more about that next week, because it is all about age discrimination, and you need to understand how and whether it does affect you, okay? It will impact millions of public sector workers and hundreds of thousands of NHS employees. What happens if you do have old pensions from where you worked previously? It could have been from the age of 18 to 25 before you joined the NHS. Are they active or are they dormant? Are they just sat there doing nothing when actually they could be moved, maybe lumped together, invested? Remember, this is the pounds and the pence. This is your retirement lifestyle. Excuse me. And pension rules change regularly and have done. We don't want you paying any unwanted tax charges. Maybe you're, particularly if you maybe are a consultant or have a higher salary within the NHS. But this is about your partners too. Sit down with them. You need to understand what salaries they're on, what pensions they've got, what is that lifestyle together going to look like when you retire. These are the details for NHS pensions, so you can contact them before retirement. Some of you retire and come back to work as well, and then still need to be able to speak to them. So they have a department that deals with stuff after retirement as well. Now, I just want to quickly touch on protection, because you guys have amazing stuff. You have death in service, okay? That's a lump sum equal to 2 years worth of your pensionable pay coming in to your bank, to your estate or to a nominated person if you die while you're working, okay? Now, 2 times pensionable pay might sound a lot of money. Let's just say your pensionable pay is 40 grand a year. So £80,000 is going to come across to your partner or civil partner, or if you filled your DB2 form in, it might be going to your kids because that's where you want it to go to. And especially if you're single, fill in your DB2 form, because otherwise it will be paid into your estate, be distributed via your will, which might be fine, but what we don't want to do is give the estate an inheritance tax headache, and actually this money's lost and goes to HMRC. But think about it. You're a man down in your household. They've got an 80 grand lump sum, but they haven't got you. That £80,000 is not going to last forever. So if you think about things like that, it may be that you want to consider looking at private life assurance and things like that. Okay, so we do just need to make sure that you're aware of these things and that your records are up to date. And now we've popped together this little thing called Wi-Fi. This makes me smile. These are the sort of things that you need to have in your toolkit, okay? You need to think about your wills. I've got a legacy. Where's it going if I get taken away earlier? The last couple of years has shown us that, you know, gosh, we don't know when that sand's going to run out of that timer. There's income protection. You get 6 months full pay, 6 months half pay. Is that enough? It has been a godsend through coronavirus, but actually, could you look to do this sooner? What about telling your kids about this? It's always cheaper when you're younger. Do I need to have some form of insurance in place for family protection in case I can't work? And then there's your individual life protection. So these are things to think about. And if you haven't got them, or you have got them, when did you last review them? I just want to throw this slide in there. I know you are all smart, intelligent, wonderful people, okay? But scammers galore. They're getting smarter and smarter and smarter. And you might be thinking, oh, I've left a message with Julia's company. Somebody's going to come back to me to talk about pensions or XYZ. You finished work, you've had a bad day, the phone rings, you answer it, and they go, because they can get your name and telephone number from any database. Hi, Jane. This is John calling about your pension. And you think, oh, wonderful. That was quick. Don't be rushed into anything. Check who they are. Don't give any details. I know you're smart and intelligent. If your gut feels funny, then stay away from it. Check if they're on the financial conduct register, if they're financial advisors, because they should be. If anything smells funny or doesn't sit right with you, keep in control, contact Action Fraud online or give them a call. They need to know about these things. Now, let's have a look at tax savings and investings quickly. Let's just understand, first of all, our pay bands. So we can work up and earn up to £12,570 per annum without getting taxed. Anything over that amount up to £50,270 is what called basic rate tax, and anything above that to 100 grand is your higher rate tax. So once we know those things, that's great. You have to remember that when you start taking your pension, and then you reach state pension age, your state pension will automatically take up the first part of this, and then anything else will then fall forwards, use the rest of the 0% allowance, and then into the 20% tax band. So just remember that when you're doing your income and expenditure. Now, if you've got some money, or you're thinking, what do I do with my lump sum? An ISA is a fabulous tool to have. You can use cash ISAs, stocks and shares ISAs, a combination of both. And the best thing about this is that it's tax-free, right? So anything that you earn on it, you don't pay tax. So the small amounts of savings interest rates that we've got at the minute, these are fabulous. There's no capital gains tax. Income from ISAs, you can if you've put enough in, you can draw an income from it. Withdrawals from ISAs, if you need to get it back out quick, is free, tax-free even. Penalties could apply if you put it in and try to fix it for 2 years because you want that higher rate of interest. And amazingly now, when you pass away, the ISA allowances are transferred across. The ISAs are automatically transferred to the spouse on death, which is wonderful. Before, they had to come into the estate and be distributed via the will. So let's speak of estate and legacy planning. This is what your estate planning toolkit should look like. You should have your wills. There might be trusts involved, whether you've set them up in lifetime or will trusts. Powers of attorney, hugely important. I'm going to touch on them in a minute. Then there's the probate and your funeral plans. I say I'm going to talk about powers of attorney. I know it's we've been talking about finances and pensions and stuff like that, but these things, I've been talking about insurance and protection as well. Two kinds: property and finance, health and welfare. If you become ill, mentally incapacitated, you've had an accident, brain trauma, you name it, this insures your brain, okay? We're told to take life insurance out when we get a mortgage. Flipping heck, we insure our pets and our mobile phones and our cars and our houses. We forget to insure this. This is all about control, everybody. This is about saying, I am picking the people I want, known as attorneys, to act and run my affairs if I become incapable of making those decisions. Everybody thinks that the spouses and partners and kids can just carry on and pick up and deal with everything. No, you can't. It is illegal. Health and welfare deals with diet, exercise, where you live, life-sustaining treatment. You know, if you can't make a decision and because you don't have the capacity, without one of those in place, the councils and local authorities will take over, and you could end up plonked in a home miles from your family, because that's where they're going to put you, because you don't have one of these in place to allow your family to talk for you. Very important, everyone. So I'm just coming back to summarize. I don't want you to be Titanic. I want you to be great in having the most amazing relationship with your money and your finances. I want you to understand that financial position you're in. Try and let's have a balanced lifestyle. Do that financial prep that I've talked to you about, yeah? Think about behavioural finance, vulnerability. Think about that cornerstone. Don't follow the herd, yeah? I want you to take financial control and build an action plan. So these are our little top tips, and it is all around taking control. But the top one at 12 o'clock is very important. Patience. Keep it simple, keep it regular, keep it small. Nothing stretchy. You've got to have patience, everybody. And you have to go and do what I said. Familiarise yourself with those bank accounts, building society accounts, pensions, whatever you've got. Do those income and expenditure budget planners. Always be fraud aware. Review your protection policies. One, you've looked at those statements. Look at everything that there is there. Could you be saving money through a different provider elsewhere? Don't forget about your legacy and estate planning. Understand your NHS pension, understand the state pension, yeah? .gov website, check your state pension, and any private ones that you or your spouse and partner have got. But don't forget, you've got these amazing staff benefits. Max out on those. You've got your blue light card. You've got your NHS employers website. It has all the different discounts and deals on. Those are little things that can help you. So always have that. Think, save, not spend, yeah? Try and change that habit and that behaviour. So you're back to that first slide again. You're in control. You're feeling confident and empowered. You're changing your behaviour, changing your habit, and having that lovely green smiley face. These are just some screenshots. So you've got your people website for support and confidentiality if you need to pick the phone up and talk to people within your organisation. Now, should you take independent advice or financial coaching? I'm not going to say yes and I'm not going to say no. I'm just going to say, because this is about information, if you want to take financial planning advice, go to a chartered financial planner. They're the gold standard, the highest qualified, okay? But you don't get confused with information being advice or vice versa, okay? This is a product that you might receive some guidance about it. You're the one that is responsible for choosing if that product is therefore suitable for you, okay? And the same if you're investing, you decide that you don't want financial advice, you're going to invest the money because you've looked on different websites or whatever, and you're going to put that money into whatever type of investment that looks like. If that is the case, just make sure they've got access, the company, that financial institution has access to the Financial Ombudsman or the FSCS, the Financial Services Compensation Scheme. Because if something goes wrong and they go belly up, you want to get your money back, because you need to make sure you're insured. Otherwise, that's your retirement lifestyle out the window. So maybe the little piggy at the end, maybe it is always better to seek advice from someone that's financial or regulated and pay for that. We don't tie a bit of string around our tooth and tie it to the door handle and slam the door, do we? No, we go to a dentist and pay for a professional to deal with things. So maybe that's something to think about. Now, we're happy to chat to you. It might be that you want to wait until the whole of this series is finished. Make a list of some questions as you go through. But if you want to talk to us now, email at info@eulogy.co.uk. Please put your name, a contact number, and please put an indication of what you want to chat with us, because this was quite a broad thing. If you can just pop the code Y22 down there, that's for monitoring purposes. Only. It just means that I know where the inquiries have come from. We keep make your privacy, we take your privacy really seriously, so we'll always adhere to GDPR regs. And the last thing I want to do is just leave you, and you'll see this slide quite a lot over the next few weeks, about your financial action plan. And I will bang on about it, everybody, but it is important for you to be honest about your relationship with money. That's your starting point, okay? Do I understand money? Do they look like hieroglyphics? I don't know. Once you establish that, there are so many organisations, and I could say banks out there, that will help you. Set your own achievable goals. Remember, not stretchy ones, not ones that are like, yeah, I want to save £50 a month, but I can only manage 20. Start with the 20. Do your budget plan or income expenditure, whatever you want to call it. Do your prep work ready for next week, please. Total reward statement, state pension forecast. Make sure you've looked those up and you've understood them. By all means, share your thoughts. Talk to family, friends, and your colleagues. There's nothing wrong with that. Just don't follow the herd. Remember, each and every one of you is individual and unique, and it is your retirement lifestyle at the end of the day, yeah? Always be fraud aware. Ask for assistance. Ask for advice. Take financial control, yeah? Okay, so on that note, I'm going to say thank you very much, everybody, for listening. If you do need us, info@eulogy.co.uk. Right, let's just see where we are. And if we have any questiones.
Hi, Julia, it's Wendy. There's no
Lovely.
question in the box.
Okay, I'm just going to, can we just stop the recording so that if anybody just does ask a question,